Cast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Welcome to the April meeting of the Yankee Model Investment Club. My name is Brent Gall. I'm the president. And if you are joining us again, welcome back. If this is the first time joining us, I'll walk through a couple of introductory slides to give a background on the club and how we do things during the meeting. And then we'll kick off the regularly scheduled items of the meeting agenda. So our investment club is a model investment club from Better Investing. It's a fully functional investment club with real money, but we are open to observation by the public to give members of the public that might not be familiar with what goes on in an investment club an opportunity to see a club in action and raise questions as far as how the club functions and deals with paperwork and things like that. We were formed back in 2008. We're currently 6 members spread across 4 different states. We went to an online-only format back in 2011, and we meet monthly on the second Saturday at 11 a.m. Eastern. We're currently looking for new members. We don't require any investment experience. We provide a mentorship program with existing members. So even if you don't have any investment experience, and certainly no experience in an investment club, there's a more experienced person there to guide you and answer your questions. And there's really no limitation on where you live, except where the state tax laws requires the club to file a return. All partners in the club must be members of Better Investing. You're expected to actively participate in the club's activities. This isn't a passive investment vehicle. And you're expected to make stock presentations using the stock selection guide, or SSG as we refer to it, in rotation with other members. And for our operations, we follow Better Investing principles. We show respect to our fellow club members. We're all still learning in this journey. We perform an annual audit of finances, file our tax returns, and follow our partnership agreement and bylaws. If there's any questions that you have during really this entire meeting that we don't get to, or if you're interested in joining, feel free to reach out to our secretary, Sriram, at the email address shown on the screen. I'll put his contact information back up on the screen at the end of the meeting in case anything comes up during the course of the discussion. So for the structure of the meeting, we follow a standard agenda. Today's agenda is available in the handout section, and I'll jump back to it throughout the meeting just to make sure we're still on track. All visitors will be muted throughout the meeting, but you can certainly type in questions in the control panel, and our moderator, Joe, will answer those as he's able, and occasionally we'll speak up if there's a general topic that might be of interest to the greater audience so that multiple people don't have the same question. We'll also have a Q&A session at the end of the meeting in case there's any other topics that we didn't get to. So regarding registration for the meeting, if you were forwarded the invite to this meeting from a friend or family member, just know that Better Investing does not have your contact information. So if anything were to change with the invitation, the time, or the login information, you might not see that in the future. So we encourage everyone to go to Better Investing, register for free for future meetings, and then you'll get automated reminders, I think a week, a day, and an hour before the meeting time, just so you're sure to have the latest login information. And again, I'll put this address back on the screen at the end of the meeting for you to confirm. And then finally, just a disclaimer, we'll be talking about financial securities, financial topics in this meeting. It's no suggestion or recommendation for purchase for any of these securities. Make sure you do your own due diligence, your own research, and come to your own conclusions before you spend any money on anything that's discussed. So with that, we'll jump into our regular agenda. And it's back to me actually for the educational segment. Excuse me. So today I'll be going over the Altman Z-score, which the background is I had never really heard of this metric, but Stephen, one of our members, has mentioned it previously as a value to look at when analyzing new companies. And I've been kind of silent the last, I don't know, several months or years when he's been using that value. So I figured this was a good opportunity to look deeper into what actually goes into the value itself. So just some background on what it is exactly. It's a single value, but it's a combination of 5 ratios of values that are found in a company's financial reports, each weighted by a coefficient or a factor, and all combined, it gives an estimate on a company's solvency, or in other words, a risk for bankruptcy. The value itself was created in 1968 by Edward Altman. At the time, he was an assistant professor of finance at NYU. And seeing the date, I figured that he has long passed on, but apparently he's still active, and I think has been inducted into the Finance Hall of Fame, and is one of the, I think, named one of the top 100 most impactful figures in finance, or something like that. So he has a lot of accolades to his name. The actual Z-score was developed by looking at various ratios from bankrupted companies and comparing them to the same ratios from companies that survived. And I think the approach was they took a ton of different financial values from the statements, did various ratios, mixed and matched them, and then came to this conclusion that seemed to be correlated to a company's, financial risk. It was originally developed for use just on publicly traded manufacturing companies, but other versions and tweaks to the score have been refined over the years for use on different industries. And I was a little bit surprised to learn, but back in 2007, median Z-score of companies that Altman analyzed, and again, he's still alive and was active, gave a value of 1.81, which we'll see in a few slides that can be a kind of a danger zone to look out for, and led him to believe that a financial crisis was near. And we know how that turned out. So then how is it calculated? So this is really what the Z-score is. It takes 5 ratios. All of these numbers can be found in the company's financial filing statements, and weights them by these numbers here. And this is, I believe, what came out of the statistical analysis that they used back in '68 when it was created. But it looks at basically these ratios that are covering these main areas, solvency, liquidity, profitability, leverage, and activity, and then rates them or weights them accordingly. And then you take those values, add them all up, and then it gives you the combined Z-score. And then a value lower than 1.8 means you're kind of in the danger zone, that you need to look further at the company to see if you currently hold it, if it's worth continuing to hold, or maybe take a second look if you're considering to buy it. Conversely, a value over 3 means bankruptcy is unlikely. And then unfortunately, there's always a gray area, which would be the 1.8 to 3 range. They don't really give any guidance on what to do in there, other than it's not a definite avoidance value or in the safe area. So knowing what goes into it, you can certainly calculate it yourself, either using a spreadsheet, or they have online calculators. I've provided a link here that allows you to enter the values into the calculator, and it weights them accordingly to spit out an actual Z-score. But really, who has time to go and find all those values? So why not just go and look up the completed Altman Z-score yourself? So this is a website that I'm fairly new to, chartmill.com. There's a section called Fundamental Analysis, but they provide the actual Altman Z-score there. This is for Tractor Supply Company, which is a security that the club owns, that I've been tracking. And as you can see, the ultimate Z for that one is a healthy 5.45, which is well beyond the 3 threshold of not really worrying about bankruptcy. So comment on accuracy. They've done several rounds of I guess, testing the accuracy over the years, and they've come to find that it's 80 to 90% accurate at predicting bankruptcy 1 year before. And again, this is based on a series of tests that they performed on samples over a period of about 30 years or so. It's worth noting that scholars have criticized the score and ratios as being descriptive but not predictive. In other words, the work kind of proved that bankrupt and non-bankrupt companies have different ratios, but not necessarily that a certain ratio is predictive of a company going bankrupt, which is great to note. But I would say that if something is, coincidentally 80 to 90% accurate, it's probably something worthwhile to include in your review of a company, but not hang your hat on it completely. I wouldn't use it as the end-all be-all one metric to look at, but certainly good to consider in your decision. So in conclusion, nothing could predict the future. This isn't a crystal ball or anything like that, but it seems to be correlated pretty highly to the financial health of a company. So it's another analysis tool to include in your toolbox that can include SSG, reviewing the financial statements directly, looking at footnotes in the annual report and things like that. So you can consider using the C-score, checking the score on current holdings that you have, or any candidates that you have for purchase, as another data point to use in your decision. And then finally, I just include some links to the sources here that I used. No intention of recommending, chart mill information or anything else provided here, but they provided some good background information for this. And that was all I had. Any questions on this?
Yeah, should we include it in our Excel spreadsheet that we use?
That's probably a good thing. Yeah, it couldn't hurt to add it in. Yeah, I'll make a note we can add a space for that in the Excel. I don't know if I didn't spend a lot of time looking if there were other sites that provided that value. I came across ChartMill, and I think Stephen, you had mentioned that previously. Registration for this is free. I don't know exactly what they use, your email address for, but I think it's fairly easy to get the value to add it to the Excel file. Okay. Moving on with the agenda, we will jump to Sriram for the secretary report. Are you able to share anything, Sriram, or what is your situation?
Can you share your screen with the document if you're able to access it?
Yeah, give me 1 second here. I'll download the drafts from Abivio, right?
Yes. Or you let me.
Okay, can you see that?
Yes.
Yes.
Okay, I'm up, Sriram.
Excellent. Yes, thank you very much. I think we had a healthy about 60 visitors for our last meeting. We had one prospective member, Sharon Watkins. She was on, but I don't think she discussed anything with us on her. And then in the beginning, Brent, as usual, he gave the overview of our club and the process, how we work on. And then in the educational segment, I went through the PERT analysis and tried to bring it to your all attention, and the usefulness as well as the value of port analysis in actually managing our portfolios. And the second part of it, I could not finish it because I was hoping to get the PDFs or the SSG data from each individual members, but I got some of them this month. I still am waiting for one or two folks. I will reach out to you again. If you could send it to me, and we will take it up next month. I did present the minutes from the February meeting, and we finalized it. Then Jack presented the treasurer's report, and that was accepted by the club. As you can see, as of March 13th, this is the portfolio in that chart, and in the table below. That is a direct copy from the BVO. And then this is the distribution diversification chart. Again, we do have a little more on the medium, whereas I think large is the small companies are a little lacking in our portfolio. That's what this chart indicates. And then Stephen presented the SSG for CPOE, and it was well received. There was a good discussion we had, and at the end we decided to buy some stock of CPOE. And then in individual members, we went through the list of our portfolio stocks we are watching. And based on that, we made some decisions on buy and sell, which is reflected in our last month's transactions on the Fidelity account. There was no old business as part of the new business. Jack requested the help with the Yankee satellite of the online chapter, and it was well received. And then Jack also walked us through how to access our tax forms. I hope everybody used it and filed your taxes. And then I think at the end, these are some of the questions and answers that Joe provided during the meeting. I tried to capture as many as on the screen. And then the list of the participants is at the bottom of the report of the minutes. And we have a couple of people who showed interest during and after the meeting. So hopefully we will hear from them today. And the next meeting is, of course, on today, and that's captured in this minute. That's all the report minutes from me, Mark.
Okay, thank you. And I may have said this in previous meetings, but if you're finding that we're answering, the same questions repeatedly over this, we can compile them into like a frequently asked questions document or something.
Yeah.
None of them jump out to me as being something that we answer every single session, but just to keep that in mind.
Yes, I think that's a good idea. We can put that as handouts on every monthly call.
Mm-hmm. Okay.
Before we move forward, on the Z-score presentation, Christina asked the question, did the scholars have any input on when the Z-score performed poorly?
I didn't really see a in-depth discussion. Everything has its naysayers, and so it was just an entry in before. I think to kind of temper your expectations before you see the 80 to 90% accuracy, know that from a scholarly standpoint, it doesn't mean that a particular company is 90% a chance or likely to go bankrupt. It just is. It's related or correlated to those values, but I didn't see anything where they did like an analysis on the 10 or 20% that kind of didn't fall in line with the other trends. So I'm not sure what what that is. If it was just the way the value was calculated, or certain extenuating circumstances where a particular ratio made things look a lot worse than they actually were. So I'm not completely sure on that.
A follow-up question is, Gene wanted to be able to download your PowerPoint slides for Altman score presentation.
Yeah, I'm always finishing up at the last minute, so I don't get it into Joe's hands to upload to the handout section. And did we decide that you can't do that during the meeting, Joe? You can't.
I don't know if I can or not. If you email it to me, and I'll see if I can.
Okay.
We'll give it a shot anyway.
Okay.
We have room for one other presentation.
Okay, then I will, over the course of this meeting, I will, get it to you, Joe, and then if you're able to upload it, speak back up later, and then we can let people know.
Okay, thank you. And you're down to the point where you need to approve the minutes.
Right. Or any objections, which I did not hear any. Okay, so we'll carry those as is. Thank you, Sriram, for that. And we'll move back to the agenda, which takes us to the treasurer's report. So Jack, can I give you presenter rights?
Yeah. Okay, can you see on my screen?
Yes.
Great. The portfolio looks like this. Today, the numbers, I think the S&P made another all-time high yesterday, so we're doing pretty good. We'll get to what we bought and sold. I just wanted to note that First Savings Financial Group is we bought a fair amount of now, so we're up around. We were up over 3%, but other things have gone up more than First Savings Financial this month. So it's hovering around 3%. Okay. Member status. All members are paid up. As you can see, we don't all contribute exactly the same amount. Transaction history. We got a dividend of $0.01 from Fidelity. Last month, we sold all of our Gentex, and although we put Gentex on the watch list, we felt that it had gone up for now as much as it was going to. We then purchased 70 shares of First Savings Financial Group and 94 shares of CBOE. Then we got a couple more dividends from Tractor Supply, Essent, Miller, and First Savings Financial. And these are our payments, the member payments. Okay. Looking at performance overall, the club has done about as well as the Vanguard 500 over its lifetime here. About 15%, which is just about bang on what we want to do. Looking shorter term, what did I do? Oops. Let's go from last year rather than this year. And we're doing about 2% better than the Vanguard 500 over since last January. Pretty remarkable given the ups and downs over the year, but like I said, it's easy to look good when you're looking from the top of the market. Okay, let's look at each investment. Miller's doing great. Middleby's doing great. They're our biggest winners. They've got a lot of good ones here. Essent is down the skosh. These four stocks we haven't owned them long enough for these to be very relevant, but I can show you that it's still calculable, just often silly. So Sprouts has gone up a lot, 138% on an annual average rate, but again, we've owned it less than 3 months or 2 months, whatever the cutoff is. So the numbers aren't really comparable. Okay, and remember the performance. Shriram and Liz are doing much better than the rest of us. Again, it's a problem of short windows. Makes it look that way. So we're all doing pretty good. Okay. And I think that's it for the treasurer's report. Oh, I wanted to show what the capital gains looks like because we did generate some more. Gentex, we actually had when I first came on in 2016, and so a fair number of shares were bought in 2015, and we bought a few more in 2017. So we have held that for a long time. And we generated a fair amount of profit out of all that activity. But what we have a bill coming due next spring when we pay our taxes, and we have to just keep an eye on that and keep it in the back of our mind that we're going to owe some money to Uncle Sam next year. Okay. That's treasurer's report. Any questions?
Okay, looks great. Thanks, Jack. I think with that, we'll turn it over to Liz for her stock to study.
Okay, I'm gonna do screen share here. So can you guys see this Superior Group of companies?
Yes.
Okay.
Yep.
So what I'm presenting is Superior Group of companies. And what they do, they call themselves brand builders. They help companies grow their brands. And they have 3 divisions. They do a Superior Uniform Group, Superior Branding Solutions, and Superior BPO Solutions. They were founded in 1920. They went public in 1968. They're on the NASDAQ since 2008, and they are headquartered in Florida. So the first segment that they do, the uniform group, they manufacture and market employee uniforms, mainly for hospitals and the hospitality industry. Also like IHOP, CVS, Lowe's. And so this group accounts for 55% of the company's revenues. Oops, let me go in here. Wait a minute. Then there's the Superior Branding Solutions. This is the one that basically they make those like company swag, like merchandise that has the company logo on it, like keychains and tote bags and stuff like that. They have locations in North and South America, Europe, and Asia. They have big companies as their accounts: Coca-Cola, American Express. They do a lot of stuff in the rock and roll world. They got the Rolling Stones, Ringo Starr. They do DirecTV, Sephora. Those are just some of them. And that segment generated about 38% of the 2020 revenue. And it's been expanding the fastest of all three of their divisions. It did well in the pandemic by offering branded PPE like masks and hand sanitizer. And then there's the Superior BPO Solutions is the third arm of the company. And so business processes outsourcing. So basically this is call centers. When you go to a website and like there's a little box, would you like to ask a representative a question? This is what they do. So, and they're in the healthcare, education, energy, travel and tourism, legal, financial, retail, e-commerce, home services. So they're pretty well diversified in terms of their accounts, their customers that they service. And that brought in 7%. And that it's branded under the name of Office Gurus Call Centers. So let's see here. So their management has been with the company pretty long time. You can see Michael Benstock is the CEO. He's been with the company since 1985. Andrew Demmett has been there since 1998. Jordan Albert has been with the company since 2011. So they've got a good, I think, a solid management team that knows the company and has been with the company a long time. So in 2020, they had a really good year in 2020. And the question is, was that a COVID boost because of all the PPE, or is it something that they can sustain? So they had annual net sales were up 40%. There was a 240% increase in net income. They reduced some of their debt, and they have been paying dividends since 1977. So was that a COVID flash in the pan? Apparently not, because the other segments that weren't doing the PPE also grew. So it looks like they've got a pretty good plan to grow, and their future growth strategy is about acquisition, synergistic partnering with other companies. So that's sort of the overview. I'll go now to my my spreadsheet here. So the problem with this company is, from a research standpoint, it's a small cap. So there's not a lot of analysts. In fact, there's like one analyst. So I'm trying to, maybe I'll put this down here. So the price that it closed at yesterday was 24.82. And I want to just give a little caveat that I chose this company because it's a small cap, and Jack and I had met, and we had kind of looked at this company, and then we kind of like said, I don't know. It's, you know, there's not a lot of research on it, and was it just sort of a fluke that they had such a great year because of the PPE? But then I joined the Small Cap Informer, which is Doug Gerlach's newsletter. He's a part of the Better Investing community, and lo and behold, Superior Group of Companies was one of the stocks that he had presented in the newsletter, and he presented an SSG. So a lot of the information that I took was from his SSG. He had a really, really optimistic view of the company, and I kind of toned it back. So, so let's see here. So Morningstar, like I said, there's one analyst. So Morningstar, let's see, cash to debt, it's a lot, 26.2% long-term debt as a percentage of capital. Morningstar had estimated sales at 29%. They didn't have anything on the estimated EPS as far as I could tell. This company doesn't have a moat. The 5-star value is 16.25. The 1-star value is 30.77, and the star rating, they gave it 3 stars. Value Line says they didn't even have any estimates. They give it a safety, a 3, and the technical, a 3. And they said the annual total return would be 56.6. CFRA, they didn't have any 12-month target, but they do say it's in the hold position, whereas I'll get to that in a bit, that some of the other analysts say it's in a buy. So the sales were 527, I guess is that billion? No, that's million for 2020 because it's a small cap, right? So on the SSG, 12% future growth on the sales. The small cap advisor had the earnings per share at 12%. I knocked it down to 5% just to be a little less optimistic. Pre-tax profit margin is 8.3%. The earnings on the equity, the row, I wasn't quite sure where to find that on the SSG. So I got this as a question mark. If I was looking at the correct field, it was 21%. The PE history, the high 22.3, the low 12.6. So the risk and rewards. So the stock is only covered by one analyst. CNN has it as a buy. Morningstar has it as a buy. NASDAQ says buy. Zacks says buy. They had, the very good COVID year. And the organic growth in the net sales in 2020 was up for all 3 business segments. So I would say that I don't think that it's too much to say that they could continue on with their growth, even regardless of the PPE, which really gave them a boost. They've been named to the Forbes' 2021 list of America's best small companies. Annual net sales were up 40% to 526 million, 240% increase in the net income. The small cap informer newsletter says buy up to 46. I did not have a buy up to 46, and I will show you that. So the high price over the next 5 years, I had it as 76.9. The small cap informer had the high price up to I think it was 117. And the low price I had at 12.9, where the small cap informer had it over $20. So the zoning, the upside downside is 4.4 to 1. The relative value is 53.6. And our 5-year potential is 1.6 here. This is a range of 1.5 to 2.0. Compound annual total return, 26.9. Projected average return of 21%. I would recommend it as a buy. And I don't know if you guys want to see my SSG. I could show you that.
Yes, please show it.
Okay. So here we go. So they had a down year here in 2019, and as far as I could tell, that was because they were kind of transitioning over their business processes, and they had made some acquisitions, but they certainly did recover in 2020. So I've got my sales at 12, EPS at 5.4, 5-year estimate 3.45, and let's see this. So when I first did this, I came out with a low price of like $31, and that is higher than the current price. So I had to knock it down. Current price, it closed yesterday at 24.82. So, so I've got it in the buy zone up to 28. So, you know, it's in a buy right now. How long it'll stay in the buy, we don't know. But like I said, the small cap investor had the buy zone up to 46. So this is a really conservative estimate, I think, on my part. So do you guys have any questions or anything else you want to see here?
I had a couple of comments, questions. I agree with your statement on the newsletters that Investor Advisory Service puts out, you know, the IAS newsletter as well as the small cap. I've been surprised as well that they seem to be, very optimistic. I'm hoping it's based on fact, but I wouldn't be as bold to, you know, hope for those high values. How did you then judge it down from like 12% down to 5%? Like where did 5% come from, or was that just a round number to use?
I kind of backed into it by playing with the numbers and seeing like, where do I get this into the buy zone? And I looked at also the prior years. And that reminds me, I wanted to mention this. So on the research where they have the member sentiment, so I'm playing with my SSG and I'm making my numbers really high and really low, and I'm noticing that every time I do that, it goes into the member sentiment. And so I didn't realize that member sentiment is not like people that say, this is my SSG, let me upload it. It just like automatically puts it there. So now I know, okay, I'm not going to really look at that much for the member sentiment, although I did look at the member sentiment to do this. So I don't know if did I answer your question there?
I think so. I think it was more of, you putting in different values to see what came out the other end.
Yeah.
Okay.
Yeah.
It struck me as being a little bit aggressive is not the right word, but maybe a little bit too punishing. You know, to go down to 5%, but it's if the numbers still work out, like even at 5% growth, you're still getting a, you know, good buy range as well as good annualized growth rate. I think that's testament to the, you know, the potential for the company itself. Where did you say that you like found or came up with this idea to analyze?
Jack had mentioned it to me, and then I got the Small Cap Informer newsletter, and they had featured it.
Okay. I always like to ask just because it's good to know, you know, where people come up with ideas, if it's walking down the street and seeing a sign, or you work with them at your work, or what.
Yeah, it was in I think Forbes best companies for 2021 or something, and then Manifest Investing had it on one of their lists as the best companies of small companies of 2021. So that's where I found it.
Gotcha. Okay. Well, I will say just my 2 cents. The visual analysis, on page 1 gave me a little bit of a shock that if you didn't have the numbers for the 2020 values, it looked like that management was losing control of the ship, sort of thing, where they're growing sales and then pre-tax profit and earnings is just falling off a cliff. But as we've seen in the past, and like you mentioned, Liz, if there was acquisitions that happened during that time, that does hit the pre-tax profit and earnings values. So it sounds like that was the explanation for the dip in there, and then they've rebounded. It looks quite nicely in 2020, and we can just hope that sustains, from through 2021 and beyond. I looked at historical growth rates, like on average it was 18, 19%, and once you chop off the previous years, I judged coincidentally down to 12% for revenue growth, and then judged that down a little bit further, down to 10%, and don't really have any way to tell you how I landed on the 12% for the revenue growth. That's oddly coincidental with the small cap newsletter. I think I just gave it a couple of fudge points in there and knocked it down to 12, and then 10% for earnings per share, just to have a little bit more padding. But the backside of the SSG looked pretty promising, and P&E ratios don't seem to be super excessive. Yeah, and so I had it in a buy range, only up to 28.30 or so.
So we're I had 28.9.
Right.
In the same ballpark.
And I didn't do any special magic on the back. I think I took the regular forecast high price, and then I think I chose recent severe market low price of 6.1 for the low price, because I think the 52-week low is down to 640 or so. Yeah, and always surprised to see Value Line did not do, has their regular analysis on it, being such an old company. You said it was formed back in like the 20s or so.
Yeah.
And it made me question, and I don't know if anyone has the answer, what does Value Line use as the metric when they go from just the presenting, financial values and ratios to actually adding their analysis? I wonder if it's a profitability metric or a size or like a popularity or what. Just because curious, I've seen some fairly well-known companies that still just have the vanilla Value Line page that I guess is good that compiles the values, but you really want to see their take on it and their analysis on it. But good to see a promising small cap company. We've struggled to find them in the past, so this is good, and looks like they have healthy performance in the last year, so it looks promising. Other people have questions, comments?
Yeah, I ended up with a SSG I ended up with a buy price that's 29, I think, almost 30. But I got there with a 9% historical growth rate, or a 9% projected growth rate in sales and 8.5 in earnings per share. So I got there differently, but ended up with not too dissimilar from your two numbers, $1 or $2 higher, I guess. So I think this is a buy if you do a lot of things. One of the things I looked at was Steve's guidepost of has it had a quarterly loss recently? And the answer is no. It hasn't had a quarterly loss since before 2016 anyway. So that's a good sign also.
Yeah, I had growth about 10% and ended up with a buy going up to about 30 as well. Liz, the stock, as far as the stock price goes, it's a little bit off of its high. I think it's one of these steady companies. I don't think the stock price is going to be doing too much in the near future anyway. Liz mentioned that the small stock advisor dropped Miller as being, I guess, as being overvalued. Liz, is that correct?
Yeah, they said that, to paraphrase, basically they didn't see that they were going to have much more price increase in the stock.
Yeah, I sort of feel that way about Superior Group as well. However, if we do want to sell Miller, they dropped Miller, and we want to switch to Superior Group. For that reason, I would go along with doing that.
One of the visitors asked a question, success attracts competitors. Is the company doing anything to address its moat challenge?
Yeah, that's a good question. I don't know. I didn't see anything specifically about that, but I did not really delve into the annual report that far.
Liz, do you know where they do their manufacturing of uniforms and stuff?
No. That would be a good thing to know, huh?
I assumed it was in the US, but that's just an assumption. I didn't see anything either.
I'm assuming that they're branding merchandise, like the company swag, is probably made in China, but I'm just assuming that. But they do take it from the initial concept with their customer all the way through the manufacturing, through the delivery of it. So they've got sort of the whole process covered there. They don't outsource.
Value Line says they have subsidiaries in El Salvador, Belize. I don't know if they do manufacturing there or what.
Yeah, that might be the call centers too. Yeah, I think the company branding products, that's the international aspect of it, where they're in North and South America, Europe, and Asia.
Steve, you have any comments you want to make on this?
Yeah, sure. So in honor of your giving the Altman Z educational segment, I went and looked up the Altman Z for this company, and it's 3.84, so it's safe. It's over 3. So one of the things, to Jack's point, I did look at the earnings over the last 10 years, and they did not lose any money. So that's a good thing. They did have 3 down quarters in a row, though, in the end of 2019, the beginning of 2020. And then all of a sudden, the pandemic hit, and their stock got turbocharged. Why? Because they're selling masks with company logos. So our company, Owl Cyber Defense, well, we all got masks with the Owl Cyber Defense logo on it. This was made, I think, in Mexico. So, you know, is this trending higher, or is it going to remain the same? I think, and especially in particularly with the variants, unfortunately, I've been hearing cases of people being fully vaccinated and then contracting COVID. So, and I know 3 instances of people that I know that have been fully vaccinated and have gotten COVID. So that's bad. So that means this pandemic thing isn't going to vanish at the end of the year, in my opinion. So I think they'll have at least a couple of years of really pumping sales on masks. So that's kind of my position on that. One thing that I initially really bothered me about the company was that they were swag peddlers. You know, how much swag can you really, how much money can you really make on swag? And I think it took me a while, but I thought about it, and my company actually goes to a lot of trade shows for a lot of security where people from the government, they have these trade shows. And so we go to them, and they actually buy a fair amount of swag to give out to these agencies. So yeah, I guess swag is here to stay. So that bothered me less. What I really, I used the regular Toolkit 6 SSG, and I didn't touch a thing on it, and it was in the buy zone. What was bothering me though was the 3 bad quarters although they didn't lose money. Now, I'm not saying that they lost money, but they had 3 down quarters, and of course the SSG showed that. So I don't know, they're awfully small. I think once we really get the boosters in place, and people really, cautious people like me who are very, very cautious about going out and exposing oneself, and until I feel actually comfortable, they'll probably have a really good market in masks. And this will really give a big bolster to the stock. And then after that, I just don't see that kind of boost to the stock. So I think it's a good cyclical opportunity, but I don't think long term. I think once the pandemic kind of dies down, unless they find something to replace that revenue stream, they're not going to. It's going to be exactly like Ira said. It's not going to do much. That's kind of where I am on it. Thanks.
Okay, thanks. Any
We
other
have
final
additional
comments?
questions from the audience. Isla Barnes wants to know, are the call centers a growing part of their business?
Yeah, apparently all 3 sectors are growing from their last annual report.
Okay. If there's no other questions, why don't we proceed to looking at our current holdings. Jack, are you able to pull up the Vivio lists of our current holdings? By the way, thanks, Liz, for that presentation. It was very good.
You're welcome.
Christian had one additional question. Do they have any diversification in the uniform industry, such as staffing and international?
I'm not sure what the question, what does he mean?
Well, I read the question direct. It says, do they have any diversification in the uniform industry, such as staffing and international? I would guess that means, are they doing it more than just in the United States? And I would imagine that's probably a yes.
Yeah, their uniform industry to me seems pretty diversified. They're in hospitals. They're also in like retail. They're in restaurants. But I think that that part is mainly in the US. They do private security, retail, hospitality, transportation, food service, healthcare, security.
Okay. I'll start. FleetCor Technologies news that I was able to find, they acquired a minority stake in Mina, which is a cloud-based digital software platform. Financial details of the deal were not revealed, but the company Mina is an electric vehicle charging payment startup and the United Kingdom's only charging solution that allows charging of fleet vehicles at home. Comments from the CEO were that the Mina EV investment is the first step in our plan to support our fleet clients' needs to both refuel and recharge their company vehicles, whether on the road or at home. So if fleets are changing from, gasoline, diesel fuels over to electric vehicles, FleetCor is positioning themselves to be able to capture both of those markets. So like I said, it was a minority stake. Don't know how much they spent or what the deal was. Hopefully more information will come out in future updates, but that is generally seen as a positive turn on that. FleetCor is firmly in the hold range. Buys up to $233 and currently it's $286. And then Tractor Supply, new value line came out, still glowing reviews. 2020 was great. 2021 is likely to continue, though slow a little bit, just from how the pandemic turns out. Value line agrees that last month's agreement to buy Orschling Farm was a good investment for a good price, and that matches the overall sentiment from the investment community as well. Tractor Supply raised just shy of $800,000 for local FFA, Future Farmers of America programs to help communities with various projects in that. So that was good community outreach. And they reported that they have updated their member rewards program so that all customers can earn points towards discounts for future purchases. And they have different tiers based on the annual spend at the store. You spend more, you earn more points faster. And that is currently, I think, at a 52-week high. It's at $177 a share. Our buy is up to, I think, $66. So well in the hold range as well on that one. And that was it for me. Steve?
So we'll start with Visa. So our nice friends at the Justice Department are investigating Visa for anti-competitive practices in their debit card market. Oh, and by the way, Visa owns 70% of the debit card market. So the stock tanked when that news came out, and it's recovered, right? It's at its 52-week high. So, it's going to be my standard mantra of, I love monopolies. Monopolies make money. I like Visa. Their earnings are due out on April 27th. I believe they're still in the sell range. I don't believe we should touch it. And of course, as the economy slowly continues to recover, although it doesn't feel really like slowly, it feels like boom. They're just, I think they had 43 billion transactions in 2019. So they're definitely the leaders. And I think the market cap actually went up to 490 billion. So that's kind of the Visa report. Coming to Alphabet, we're at the 52-week high. Its Altman Z is 11.75, and I don't know if I said Visa's was 7.36. Alphabet's market cap is $1.536 trillion. Their earnings are scheduled to come out April 27th of this month, so we do have a little tidbit of bad news. The head of Waymo is stepping down, and it wasn't clear why, and I don't like non-clarity on these things. Another little tidbit that came out was that one of the founders of Google happens to own a company called Whisk, W-I-S-K. And Whisk had submitted patents on electric aircraft, and these patents were copied by two of the engineers that defected to an alternate company. And what's hysterical is the patents look exactly like the new designs of the other company. So the point being of even bringing that story up was that Google has its fingers in all kinds of moonshots. And if one of those takes off, this thing is going to double, triple, quadruple. They're the genesis of a lot of new ideas. Okay, moving on to D.R. Horton. D.R. Horton's Altman Z is 6.26. D.R. Horton is at a 52-week high. Their market cap is $34 billion. And the bright spot in the cloud is that even though housing prices are at all-time highs and analysts expect there to be a shrinking, there was a J.P. Morgan analyst that recommended D.R. Horton that they're going to withstand if there's a shrinking. That they recommended two builders, and D.R. Horton was one of them. So I was very happy to see that analysis. And I didn't get when their earnings are coming out, but I will keep close track of that. That's what I have. Thank you.
Okay, moving on. CBOE is reporting on April 30th. I just checked their Altman Z is 3.31. They recently announced that their global trading hours are being expanded to essentially 24 hours a day, 5 days a week. Their first quarter average daily volume in trading was up 16.9%. Their options trading was up 15%, although their futures trading was down 23%. So I have them as a buy up to 108. Regeneron, just checked their Altman Z at 7.58. Their earnings come out in May 6th. Recently, the NIH has strongly recommended that the Regeneron antibody treatment be used in outpatients at high risk of clinical progression and where variants are common. So that was good news for them. I have a buy up to 560, so that's in the buy range as well. That's what I have.
All right, Jack. You're on mute if you're talking.
Essence was up about 8% since last month. It has essentially no news. There's not much news for any of these guys. They are now above what we paid them for the first time in like forever. You can see in here we made 570 bucks on them so far. So that's good news. They are in the hold zone. Dollar General. Essence going to report on May 7th. Dollar General also is up about 7%. They're going to report earnings on May 26th. Their fiscal year is, I think, the end of January, not the end of December. So they're behind by a month. Sprouts Farmers Market is a buy up to $32. I have them as a buy. They also are up 7% from last month. And they'll report on May 6th. And that's what I have for these guys.
Okay, thanks. Liz?
Okay, so we've got FSFG is still in the buy zone. Current price 68.18, and the buy is all the way up to 99. So we've got looks like we'll have a while of opportunity there. Value Line downgraded them on the technical to a 3 in March. Not much to report. Brian Simon has joined the bank as a senior vice president of mortgage and banking. And he's been a CEO of other banks. He's been a COO in his career. He's also been on the advisory board of Fannie Mae and Freddie Mac, and has been voted one of the top 100 mortgage banking executive industry. So not much to report on FSFG. So I think we're at 2.9% of the portfolio with that one. So if we wanted to add to the position, it's in the buy. Middleby. Let's see. It went down from our last meeting. I think the last meeting we were at like 169, and now it's at $162 a share. It's in the hold range. Value Line just came out with a new report yesterday. They said they're cautiously optimistic about the company's near-term recovery prospects, and they're looking for share earnings to bounce back between 35 and 40% on a 15% revenue advance this year. And they said the top and bottom lines ought to expand 5 to 10% and 15% respectively in 2022. They also mentioned that it's already trading within their projected 2024-2026 target price range, eliminating the long-term capital appreciation potential that they had envisioned. So that's Middleby. Let me see here. Oh, they also announced a partnership with VYV, to offer proprietary antimicrobial technology. And that's an LED technology that creates environments that prohibit the growth of bacteria, fungi, yeast, mold, and mildew in the food service industry. So that's about, and Turbo Chef Technologies. they have come out with a new advancement in ventless, automated, modular, high-speed cooking. So that's the news on the Middleby front. And then we come to Alta. Alta is sneaking up into the sell zone. It's not there yet. Right now it's at $322, and the sell zone is at $328. Not much to report there. JP Morgan annual retail roundup virtual conference. They're going to be presenting at that. They did come out with their annual report, which I haven't had to delve into, so I'll do that now in the next meeting. So that's it for Alta, and that's it for me. Thanks.
Brent, this is Sriram. I have INS, Intelligent Systems, and Miller. INS, both of them actually within the last month or so, they had their quarterly reporting, and they seem to be both of them recovering or proceeding. They had their calls, and basically both companies, they seem to be cautiously but predicting growth in their own way. Miller Industries, I'll come to that in a minute. INS, again, they did get some federal contracts on which they're building, and they were optimistic about how they're going to build in the future. Again, in the price is nothing, no news that gives us any concern about INS. As far as Miller, again, from fundamentals and what we study, Miller Industries seems to be heading in the right direction. But I saw that email from Liz regarding the Doug Gerlach's warning about this. So I'm not very familiar with that. Can somebody tell me what does it mean and what are we supposed to do with that information?
Liz, can you recap what you were able to find, or what you forwarded to the team?
Just looking here. Hold on a sec. So let's see. So what they're saying is that the valuation is already advanced ahead of earnings, so the upside is limited from the stock's record high current price. So basically, I think they're saying that the stock price is high and they don't expect it to go much higher. So even in a best case future earnings scenario, the potential total return just isn't enough to warrant continuing to hold. So for now, they're discontinuing coverage and recommending the stock for sale.
I see. So it's 52-week high is like 47, 57. Current price is what, $46. So it's hitting its head up against the ceiling there. So they're saying kind of dump it and then look again if future prospects improve.
Mm-hmm.
Okay. Okay, I think that wraps up our current holdings. We have Gentex on the watch list. Sriram or anyone, did you guys check on that?
I have it as a hold.
As a hold?
Still.
Okay.
Yeah.
Okay. Well, we come to the part of the meeting where we vote on buy or sell. Any initial proposals?
I propose we put our current holdings in First Saving, current money in First Saving Financial Group. And as far as Miller, if it's fully valued, I'm not proposing necessarily. We could talk about selling it and switching to Superior Group, which I think is also pretty fully valued, but at least it's in the buy range.
Okay. I think we've carved out a fairly healthy profit, I think. 50% growth from Miller. So I'd be okay with selling it. And then if price decreases in the future, we could always buy it again and ride it out. I agree that I'd like to top off FSFG with a little bit of money.
Yeah. Liz, was it Miller or Middleby that the small cap informer warned us about?
Miller.
Miller. Okay, I misunderstood. Great.
And I think, I'm sorry, along those same lines, I think that it was Value Line that said they think that Middleby has topped out. It's already in their projected 2024 target price range. So they don't see long-term appreciation.
I think I agree with Ira, who made the suggestion about selling Miller on the small cap informers take on things.
Does anybody have an SSG on Miller? What zone is it in?
Shiram said it was up, right?
Huron, was it buy, hold, or sell?
You're on mute, Sriram, if you're talking.
I'm sorry, I'm trying to open. Just bear with me for 1 second.
So it's almost in your sell range. It's essentially in it.
Yeah, that's where I have it.
I'd be on board with selling Miller.
Yeah, I mean, I have to admit, we're at the top of the market. We are ultra frothy.
Yeah.
So
I agree. No. I think if the prediction is that we are not going to see any more, I think it's a good idea. I think we'll keep a track of it, and if it comes back to buy zone, we will do it again.
So how about we sell all of Miller, then we put the proceeds plus our current cash, maybe we split it like 30% into FSFG and the remaining into Superior?
Sounds good.
So I just want to throw another option in there. So Sprouts is also in the buy zone.
Yes.
Do you guys like Sprouts better than SGC?
When I presented Sprouts, it would not be in my buy zone anymore, but you're looking at it now and you say, and you've increased the buy zone, right?
Yes. It went up a little bit. It
Yeah.
just happened because they came up with a new, they came out with a new value line.
Okay. My original presentation, 26 would be in the hold
Yes.
zone.
So I think
But you're
I think it's up to 29 or 30 now. But we're okay in terms of how much of Sprouts we own. It's 5% of our portfolio. So we could add a touch to that if you want.
Yeah, ideally, we'd like to see like 7% on every,
Yeah.
based on the number of stocks that we own. 3% is our bare minimum, and 7%
Right.
would be more of our ideal.
Yeah. So we'll have about $21,000 or so to play with. I'm sorry, that's not right. Well, about $10,000 and some to play with. So 7% is something like, well, $10,000 would get us to around 5% or so. Fleet Core is 5%. It's $10,000 market value, 11,000.
Now, if you look at CBOE, that's 4.4% right now, and that's still in the
Yeah.
buy.
Oh, CBOE is in the buy range.
Yes.
Okay.
So, instead of Sprouts, I mean, if you're considering other stocks, why not
Yeah.
consider one with the lower holdings?
Yes. All right, so somebody make a suggestion about how we should deal with the how we should spend our money.
So I guess here's the other thing. Somebody had mentioned this a couple of meetings ago about like how many stocks do we want to own that would be manageable for us? So I'm just wondering, I mean, I like the idea of adding another stock to the portfolio, but are we getting unwieldy with the size of it? Would it be better to increase the already existing positions rather than add a new one?
Well, we're getting rid of Miller.
Not an issue. I guess we should not be following more than 3 stocks a person. That was my criteria, which I mentioned.
Yeah, I think that's a reasonable thing.
But
I think we're nearing the limit of what we should.
Be a problem.
What did you say, Ira?
I said we should not have people following more than 3 stocks.
Right.
Based on the number of people in the club. And if we sell Miller, we're not going to have an issue with too many stocks because we're just substituting.
Right. I was just thinking if we were to pick up SGC, or is that not on the table now?
Well, it is, but we're substituting Miller with SGC.
Okay, gotcha.
I think it depends on like where we invest the money. Do we feel that there's still growth potential in SGC? And after Stephen's, albeit somewhat depressing statement where COVID might be with us longer than we would hope if there's still sicknesses beyond vaccinations, from their PPE segment, SGC might still have room to grow. So I'll repeat the proposal. I think we're all in agreement probably of selling Miller, and so now it's where we want to put that money. I'll propose that we buy SGC and then I think split it between SGC and at least FSFG, just because, as Ira pointed out, it's 2.9 is our smallest holding. and it is in the buy range. So if Miller, I think we could go to like whatever the money value works out is top up FSFG to be 3.5%, and the balance of the cash that we get from the sale and our current cash go into SGC, and I think those would both be around 3.5%.
That sounds reasonable. I'd go with that.
I agree.
I'd love to top off CBOE also, but I don't know that we want to carve off even more from FSFG and SGC.
Brent, let me run this thought by you. I think that SGC, their earnings are coming up at the end of the month or fairly shortly. So what we've done before in the past is bought a small amount, and then if they had crappy earnings, then we jettisoned them. So I would kind of be at the buy as little, or if the metric now is that the minimum amount to buy is 3%, just buy 3%, and then put the rest into what into where the SSG is saying that it's a buy. That's how I would go.
Okay, I think that would mean that, yeah, we do 3% into SSG, and then that'll bring FSFG up to probably 4.2 or something percent. I'd be okay with that.
The other thing is that SGC, I think it closed at like 24, and we said buy up to like 28. So that's a smaller window, whereas FSFG, the current price is 68 and it's a buy up to 99. So we have a wider window of opportunity to add to that position.
We have time for that one. Yeah.
Yeah.
So I think I can do that. So I'll buy SGC so it makes 3% or so of our portfolio, and I'll spend the rest on FSFG. That'll bring us up over 4% probably.
That's fine with me.
I agree.
Yeah, I'd go with that.
I agree.
Okay. Good.
Any other proposals? Okay.
What do you guys think about Middleby? And that value line says they don't see much more growth on that. Do you want to wait on that and see what happens?
Yeah, I think that's good. We should think about that some more.
Yeah.
Was there any word on by Middleby on any of the investment advisory services that we follow?
I don't know of any.
No, I don't think so.
Yeah, I have the latest on that. They have it as a buy up to 141. So what is it now? It's at 162. So they have it overvalued at 187. So they're not saying, they don't say sell it or anything.
So it's in
Yeah, I
their
think
hold.
Middleby, I hate to even say it, but I think it's going to run a little more. And I would agree with that analysis that Ira just read. So I would hold that for now, and then, but when it starts hitting those numbers, then sell it. But I think it's still got a little bit to run because people are going to be going out to eat more. That's just going to be coming online, and they're going to get a surge. So I would hold that for a little bit.
It's now our second or third highest holding, third largest holding.
And the sell range on the SSG is $223. So we've got a ways to go with that. Okay.
Yeah. Okay, good.
Okay. Thanks, everyone. You got that? What to do, Jack?
Yes.
Okay. Okay. Moving on with the agenda. We didn't really have any old business topics to talk of. 2 items in new business. One of them we're going to punt. Refreshing judgments for use in PERT. Sriram, we talked offline. I think you've gotten some responses, but not all of them. So we'll postpone the full review to May. Is that right?
Yes.
Okay. I'll take back presenter rights here. Okay, and then Joe, you had a few topics.
I had a couple of things I wanted to speak about. My name is Joe Farrell. I'm a director of the online chapter, and I kind of moderate this meeting and serve as their backroom person, the person that's been answering questions during the day. But I had a couple of things I wanted to mention. One of the things I was going to talk about was registration, but Brent did a great job of talking about doing your registration, one for each person. And I would note that we have 5 or 6 people that are registered just with a first and last initial. There's no name out there. We would appreciate it if you don't do that in the future. One of my better investing topics that I work on, or programs that I work on, is called Visit a Club. Model clubs like Yankee are required to be a member of the Visit a Club list because it's part of their mission to teach and train and let you know how things work. Private clubs, that's other than model clubs, if you're looking for new members or you want to help us spread the BI methodology, we encourage you also to join the Visit a Club. Now, we understand the reluctance to invite strangers into a member's home. But if you meet either over the internet or in a public place like a restaurant or a library or a church, please consider adding your club to the lists. You get there by going on the landing page on the BAP website and then going to the investment club's heading, locate your chapter, and there's a section on the Visit a Club program with an application URL attached. The third thing I wanted to mention is just what you've seen today. Now, speaking to the visitors, and that model clubs are training grounds. Part of the process is to encourage you to join a club and eventually learn enough so that you decide to strike out on your own and create a club with your friends, co-workers, whatever it might be. There are BI volunteers throughout the United States that can help you. We even have a few in other countries. They're willing and anxious to help you learn how to do things. I have a friend who's a better investing person. His name is Bob Hewell. Some of you may know his name. He has a saying. It says, friends don't let friends retire broke. They teach them to be better investors. And that's what we're here to try to do, teach you how to be better investors and encourage you to teach others how to be better investors. The last thing I want to mention is the Altman score presentation and the draft of the March minutes are now in the handouts section. It's the first one on my list as a PDF. I put the 2 things together as one report because I only had room to put one more thing on there. So you have 2 different topics in the same download. So if you want either one or both of those, it's available for you to download. And I do want to speak just for a few seconds to my friend Chip, who lives in England near Birmingham, and he is in the process of trying to start an investment club there. He's working through the process with 2 or 3 friends. He attends this meeting on a regular basis. It's the evening time where he lives, but he's interested. And we encourage you to bring interest from other people also. I'll shut up now.
Excellent. Okay, thanks, Joe. I'm wondering how popular investment clubs are over in England or in other countries. I wonder if they have.
I know that there are a bunch in Canada, and I know there's some in the East, I guess is the way they call it, Japan, and we have visitors that show up from other countries in the East also, the Far East.
Right. Okay. And also might be worth mentioning that by no means is there a limit on how many investment clubs you can be a member of, right, Joe? I think you are, what is your count
Three.
up to?
Three.
Okay. So just based on what your available time is, you are, more than welcome to continue sitting in on our monthly meetings if you have one or more investment clubs that you hold in private with your own group of friends or family or whatever else.
I see some names. I see some names in our list of attendees that I know are in other clubs.
Okay, that's good. And I guess let me know if you want me to add a line or a bullet or something to my intro presentation for the Visit a Club
Okay.
membership or sign up or whatever we call it.
Okay. We have a question out there from Leslie Madison. A couple of months ago, Sriram used a big, with big charts, I guess it was, chart for PE and had some lines on it. And she's wanting to know, how do you do that? So it may be that Sriram needs to answer that offline, or maybe answer it next month, whatever works best for this meeting.
I will do that. Actually, I will add a slide for the next month's meeting
Okay.
during my Bird presentation. I think if I look at the assignments, probably Brent is coming to this. I have my stock study, and do you have any ideas? What would you like to study?
You mean candidates for the stock to study for May?
Yes.
I think we can be thinking of, and we can shoot them over to you if we come up with them by email.
Please do.
Okay.
One of our visitors is from Canada today. She said broadcasting from their igloos.
Oh, nice. Well, as long as you have Wi-Fi in them, that's what counts. So.
Oh, that's cool.
Yeah.
So I just got one question before we close. Do you want me to upload into Vivio my spreadsheet along with my SSG for the stock I presented today?
Yes, I think that's what I've been trying to do before I stopped being secretary.
Mm-hmm. Okay.
I guess it couldn't hurt. I've only been doing SSG, but we have the spreadsheet, so we can just as easily upload that as well. Okay. Joe, are you able to see, is Sharon Watkins still in attendance?
You should be able to see it also, and Sharon is still here.
Okay, can you promote her or bring her over to be able to chat? Sharon, if you're able to hear us, we're looking to do a little bit of a rearrangement on the stock to study presentation.
I just unmuted her.
Okay. Are you with us, Sharon?
Yes, I'm not sure if you can hear me.
Yes,
we can.
Loud and clear. So Sharon, we have you down for the stock to present in June. Ira was scheduled for July, but he's not going to be able to attend that meeting. So I guess first question, are you still interested in presenting at a future meeting? And if so, would you be willing to do in July instead of June?
Yes and yes.
Okay, perfect. Okay, well, great hearing from you. I know we've been trying to connect over email, and you've been slammed at work, which is still understandable. So we'll put you down for July, and certainly feel free to, reach back out to me if you have questions or whatever with regards to the company you decide on and the analysis that you do.
I appreciate that. Yes, I'll be contacting you probably in the next couple of weeks.
Okay, sounds great. Okay, then for next month, like he mentioned, Sriram, it's the stock to study, and Steve, we have you down for the educational segment. And then other than that, if there's no other items to discuss, I want to thank everyone for attending. Our next meeting is May 8th, 11 a.m. Eastern. We have a channel on YouTube where all of these recordings are posted. So just search for Yankee Model Investment Club and you'll be able to see past videos. The address for re-registering or making sure that you are registered for future meetings is there, so that you get the automated reminders to join the meeting. And then if you think of any questions after we hang up here, or if you're interested in joining our club, reach out to our Secretary Sriram at the email listed there, and he'd be happy to answer any of your questions or tell you what the requirements are. And with that, we'll close this month's meeting. Thanks again for joining us. Hope to see you again in the future months, and have a good rest of April, and we'll see you in May.
Thank you. Bye-bye.
Everybody.
Bye.
Bye, everybody.
Bye-bye, everyone.